Hi, welcome back to Why You're Paying More in Taxes and What You Should Do About It. I'm Alexander Elliott, and in today's episode, we're going to go through the deductions that most people completely miss, and more importantly, we're going to talk about exactly how to claim them. All right, that's important, right? Because here's the thing. Most people know about the big obvious ones like the mortgage interest, charitable deductions, okay, student loan interest, but the tax code is full of deductions that fly completely under the radar. And they add up to real money. Let's get into it, okay? Deduction number one, okay, home office expenses. If you work from home, okay, and you have a dedicated regular use workspace in your home, you may be able to deduct a portion of your rent or mortgage, utilities, and internet as a business expense. That can add up too. There's two methods. The simplified method, which gives you $5 per square foot up to 300 square feet, okay? And the regular method, which calculates the actual percentage of your home used for business. As an example, if your home office is 200 square feet and your home is 2,000 square feet, that's 10% of every qualified home expense that becomes deductible, which is probably one of the better ways to go out of the two. All right, deductions number two, vehicle use for business. If you use your personal car for business purposes, okay, not commuting, but actual business driving, you can deduct that mileage. The IRS sets a standard mileage rate for each year. In 2025, that rate was 70 cents per mile. So if you drove 10,000 business miles in a year, that's a $7,000 deduction. But you have to keep a mileage log. There are apps out there that'll help you do that, or you can use a spreadsheet. Okay, or just jot it down. Use composition book. Deduction number three, health insurance premiums. If you're self-employed, you may be able to deduct 100% of your health insurance premiums. Okay? For yourself and your family. This is one of the most valuable deductions that's available to freelancers and business owners, or if you have a side hustle. And many people don't know it exists or think it only applies to certain situations. Okay? Deduction number four, student loan interest. A lot of folks out there with that. Even if you don't itemize, you can deduct up to $2,500 per year in student loan interest as a above-the-line deduction. That means it reduces your taxable income whether or not you itemize. That's important. Itemize your deductions. Income limits apply, so check the current threshold, but this is an easy one to claim. Okay, deduction number five. Educators' expenses. If you're a K through 12 teacher, you can deduct up to $300 or $600 if you're married, filing jointly, and both spouse are educators for out-of-pocket classroom expenses. This is another above-the-line deduction that requires zero itemizing. I don't think that's enough, but that's what they're giving you. Anyway, deduction number six, contributions to a health savings account or a HSA. If you are enrolled in a high deductible health plan, you can contribute to an HSA and get deductions for every dollar you put into it. In 2025, individuals can contribute up to $4,300. Families could contribute up to $8,550. That money goes in pre-tax, gross tax-free, comes out tax-free. When you use it for qualified medical expenses, that's the triple advantage. Deduction number 7, job search and personal development expenses. If you're job hunting in your current field or you're investing in courses, certifications, or books related to your work, some of those costs may be deductible. For self-employed folks, this is especially powerful. Education and training directly tied to maintaining or improving your skills in your current trade or legitimate business is a legitimate business deduction. I'm sorry. Anyway, deduction number 8, retirement contributions. I know we touched on this in episode 1, but it's worth repeating here because it's one of the most powerful deductions available to everybody. Traditional IRA contributions, 401k contributions, SEP IRA contributions, okay? All of these reduce your taxable income dollar for dollar. A self-employed person maxing out a SEP IRA in 2025 can contribute up to 25% of their net self-employment income, up to $70,000. That's an enormous deduction, okay? Now, let's talk about how to actually claim these things, these deduction things, right? Step 1, keep records all year long. Don't wait until tax season. That's a no-no. Use a folder or a physical or digital app. Drop receipts, invoices, mileage logs in there as you go. The IRS doesn't accept, I think I spent around this much. You need your documentation, especially if you get audited. Step 2, know which deduction requires itemizing and which ones are above the line. Above the line deductions are the student loan interest deduction and the educator expense deductions are claimed regardless of whether or not you take the standard deduction or the itemized deduction. Okay, the itemized deduction only applies if your total itemized exceeds the standard deduction for your filing status. In 2025, the standard deduction for a single is $15,000, and for married filing jointly is $30,000. Step 3, work with a certified tax advisor. It's not enough to know these deductions exist. You need to actually enter them on the correct form. Schedule C for self-employment expenses, Form 2106 for employee business expenses in certain situations. It matters where things go. Don't put it in the wrong place, okay? I've had that happen. The bottom line is this: deductions are legal, they're encouraged, and they're yours to claim if you know where to look and you keep the records to back them up, okay? Very important. In episode 3, we're going all in on tax strategies, specifically for the self-employed and freelancers and side hustles, because you have some of the most powerful tools available, and most people barely scratch the surface. Also, we just added our client library to our website. It's under client resources. We have tax, accounting topics, articles, white papers, educational videos, and a free monthly financial and tax newsletter, okay? Be sure to sign up for that. Again, it's totally free. All right. See you in episode 3. Have a blessed one. Look forward to seeing you.